Hello traders, this is FX with Q. I'm here to give you a quick look at what the FX markets are going to be doing and what risk assets are going to be doing this week. So last week, the S&P 500 established itself at March's highs around 2,800. Slowly, it has been climbing back into the upper part of the range from the previous quarter. Moving away from US equities, we also saw that emerging markets, EEM, continue its retracement of the consistent bearish move of 2018. It is yet to bounce to the 236 fib level, so from a technical perspective, I believe that there is some more room to recover. With these two factors in mind, US equities and emerging markets, one would expect that the dollar had a rough end to last week. Taking a look at our dollar basket, which is the dollar against the majors, the dollar has prepped against previous highs. Future outlook for the week ahead for the dollar is pointing towards some more consolidation. I do not expect an amazingly quick move to the downside for the greenback based on the current levels of market activity. Looking at the average true range and looking at the calendar for next week, I'm forecasting neutrality. There is retail data coming out Monday and Fed Chair Powell's testimony before Congress Tuesday morning, but I don't see either of those providing a significant driving force for the US dollar. A pair that I do expect to gain traction next week is Aussie USD. Looking at the Aussie basket, it had a healthy end to last week with a bearish engulfing reversal pattern off of the lows. Over the next few days, we could see it move back up into the middle of the 2018 range. Thursday, we have an update on employment data. This component of the Australian economy has been healthy recently. The fundamental risk themes I see that can push the Aussie off the base case behavior is certainly going to be trade wars and a cooling housing market in some areas, which is also indirectly related to the Sino-Australian relationship, as Chinese buyers have helped to increase Australian asset prices. Those tail risks aside, I am bullish on Aussie this week, since I am also neutral on the dollar, and the fundamentals seem to be fairly clear for both halves of the pair. I am considering the technical case for an Aussie US dollar long. What we have here is a butterfly pattern with a nearly flat top and flat bottom. As we can see from this weekly chart, there has been consolidation over the past 5 weeks. The average true range of the weekly is also what essentially is 4-year lows. This makes it a fairly safe environment for reversal of trend with low volatility, if one is patient enough to wait for the reversal to make its way out of the tight range formed over the past few weeks. Another pair that has been in significant range is the Euro Great British Pound. One of the weekly on the weekly ATR, we see that moves in price action have grown smaller and smaller and are now falling to lows not seen since the lull in summer of 2014, a period of system-wide low volatility. If we look at the daily chart, we can see that there's major range consolidation, lots of choppiness. If you look at the MACD, there has been a daily bearish cross. But also, with all the chop, this is indicative there's lots of uncertainty and there's low volatility. And you can see this if you look at the weekly average true range. Fundamentals for this pair are also a bit muddy. Prime Minister May has huge challenges ahead of herself in steering the nation through Brexit. Last week we saw the resignations of high-ranking officials in the May camp, including David Davis, Boris Johnson, and Steve Baker. There's a fairly active week for the pound fundamentals, however. Tuesday is Bank of England Governor Carney's speech before the Treasury Committee. Then earnings data will be released. Then Wednesday is when the CPI year over year will be released. UK inflation data has been fairly robust. Finally, retail sales data will be released on Thursday, despite fairly significant retail sales beats the past few months. The forecast rate is still only for 0.2% growth. This sales data, along with the inflation data, could confer pound strength. However, I am going to stay away despite the enticing technicals due to the aforementioned political risk. Another way to take advantage of the dollar with no fundamental wind in its sails this week is to look at the dollar yen. It posted an epic break of descending trendline resistance last week as global financial systems bid assets further higher. However, the momentum required to sustain further bullishness above the trendline would need to be significant, and fundamentally speaking, there isn't much on the radar for the dollar that indicates that it can find new motivation. From the other perspective, there are many factors lining up that could point to dollar weakness soon. Tariff policy, the general slowdown in global growth and monetary policy, specifically the probability of a moderation of the Fed's plans for interest rate hikes. From the technical perspective, we're looking at an AB equals CD move that I'm doubting can reach full symmetry. I've put a trade frame of entry, stop loss, and profit on the chart here for a shorter duration trade for those of you who want to be aggressive. I'll tell you what I'm going to do. I'm going to be a bit more patient and see just how close to symmetry we can get before I build into a large position. Along the same lines of taking advantage of the flagging momentum of last quarter's dollar bullishness, CAD has also had a light docket for fundamentals this week, with retail data and inflation due for release out of Canada on Friday morning. A technical pattern that I've pointed out in the past few videos is this bearish bat. The reversal off the pattern has now developed slowly for the past 3 weeks. This means there's still good risk-reward basis for trading the pair back down into the range. Will we see the dramatic to the downside this week? Probably not a huge move, but the technicals in this longer-term trade still remain enticing. So that's it for this video. Thank you for watching and listening. Good luck trading out there.